All right. I hope this could be the right time for us to get started in today's call. Good morning, good afternoon, ladies and gentlemen, and welcome to our Super Wednesday. Allow me usher in our guest speaker, our chief trainer for today, our superstar for today, a team leader, a social media trainer expert, a coach in the crypto market space, an icon in the industry right now that has been able to help magnitudes of people all over the world to understand the fantastic power of cryptocurrency. Why now and why to take it seriously? Allow me with pleasure invite our guest speaker for today and the host for this meeting, none other than Coach Manish, all the way from India. Welcome, sir, and happy to have you with us this morning.
Just give me a few seconds. Okay, good morning and good evening, wherever you're joining from. And this is Manish. My name is Manish. I'm from India. And by profession, I'm a digital coach. I teach people how to build their business online. And since the last 1.5 years, I've been associated with this wonderful platform, Royalq. And I've been building my business. I'm building my wealth in crypto market space. So the crypto market is so fascinating, so interesting, and every day we learn new things about it, and we develop new strategies, new ways to earn more income. So today's topic, as you all know, is about uh, why we should seriously think about building our wealth using the advantage and the power and the potential of Bitcoin halving. And what exactly is Bitcoin halving, how it has so much power to influence your financial future, and what is the correct information that you must learn and plan your future accordingly, and your what should be your primary purpose for the next 1 or 2 years. So these are the topics for today. And in the last, I will also share with you some very interesting strategies that you can use using Royalq, and how you can give the best settings to build your wealth and accumulate more and more of Bitcoin for your future. So let me share my screen, and I welcome you all. And thanks, Leader Julius, for giving me this support. Let me share my screen, and I bring you my slide for today. Okay. So the first topic for today is the 4 M's of trading. I love this word M because my name starts with M. My name is Manish, and M stands for Manish, and M stands for money also. So that is why I always take interest in what starts with M. So the 4 M's that are very important to focus on if you are a trader, if you are an investor in crypto market space, the first thing you should put your focus on is M stands for money. M stands for money, and in money, what it means in crypto trading. In crypto trading is the risk management and the money management. How you manage your risk, how do you manage your capital, and how do you manage your money in crypto trading. The second important thing to to consider very seriously is the M for market. The second M stands for market, means that you must have a good knowledge about the technical analysis and the fundamental analysis of the market. Otherwise, you won't be a very good trader. And what is more important than money management and market knowledge is your method of trading. How do you trade? How do you design your trading plan? What are your trading rules and indicators? And the most important thing that is even more important than all of these is your M for myself, your self trading psychology and your emotions. How do you control your emotions? How do you deal with the market cycles? And do you understand your market psychology? That is most important. What kind of trader are you? Because every action that you take will be will be originated from your own mind, your own mindset, and what things you see and what things you understand. So money, market, method, and myself, these are the four important things if you want to become a successful trader. And let me take you and describe you a very beautiful pyramid that is very important to understand if you want to become a successful trader. What three things are most important to learn in trading, and what these are the things that decide your future in trading, whether you will be a successful trader or a unsuccessful trader. And among all these three, if you if you understand the proportion of their importance in your trading journey, 10% importance I will give to that strategy, the strategy or the technical knowledge that you have, the technical analysis that you do. How do you use the indicators? How do you study the charts? How do you do the fundamental analysis? These are all related to strategies, and how good is your strategy that decides your profit or loss in the market. But even more important than the strategy, even if you don't have much technical knowledge, even if you don't know how to use the trading view application or how to draw your support and resistance, even if you have little knowledge, still if you have good knowledge about the money management, how do you manage your capital, how do you manage your risk, how do you define your portfolio, that comes to around 30%. If 10% importance is given to your strategy, you can think about that even three times more important is your money management skills. You must learn these skills. These are very important. Even if you don't have much technical knowledge, but you are successfully managing your capital and your risk, then you cannot fail in trading. And the most important thing that you must understand, that you have a trader mindset that gives you the psychology of the market. You must understand the psychology of the market, how the market behaves, how the market moves from cycles to cycles, and what should be your mindset if you have a clear understanding about the psychology of market. So these are the three important things, but the most important thing is the psychology of the market. That is around 60% more weight they are giving to this single part of the this pyramid. So let us invert this pyramid upside down, and now the top of the pyramid shows us the psychology of the market, and what do you mean by psychology? How much patience you have, how much control you have on your emotions, and what is your trading psychology. So these are the three important things that comes in psychology. How much discipline you have in your trading, how much disciplined trader you are, and a disciplined trader knows when to trade and when not to trade also. A disciplined trader knows when not to trade, when he should be waiting for the right trade to come to him. You should not run after the trade. You should wait for the right trade, right time to enter and right time to exit the trade. That comes from the psychology and the discipline of the trading. You should not be an emotional trader. You should not trade on FOMO. You should not trade on revenge. You should not run after the trade, but you should have good and cold mindset and correct expectations. So these topics come in the psychology part. Second part is that is very important is the risk management. How do you manage your capital? That is the main thing that decide whether you will be the successful in trade or you will fail in the trade. So risk management consists of protection of your capital. How do you protect your capital? What should be your position size according to the capital? How much size of your each call should be, and how much more buying you are doing in if the market is dropping? What is your trade management? How do you assess the risk? How do you stop the placement? And what is your profit assessment? These are the important things that you require to learn if you want to learn the risk management part of the pyramid. And the last thing that is important is the technical analysis part. You can learn how to analyze the market, the price action analysis, the technical indicators, the structure analysis, and the trend analysis. These we regularly teach in the morning session. And even if you have little knowledge about the trading psychology or about the technical part of the trading, still if you have good knowledge how to manage your capital, how to manage your risk, and how to understand the psychology of the market, that is the most important thing that is required in the trading hierarchy. So see here what the pro traders, what is the difference between a newbie trader and a pro trader. A newbie trader thinks that the most important thing is to learn technical knowledge, technical analysis, but a serious trader, a pro trader who has a lot of experience, he knows that the most important thing to have control on is on his emotions and patience and understand the market psychology. So this is how you must learn. And talking about the psychology, I can explain to you in a short time how the market cycle works, how the market cycle moves from up to down and from down to up. The first thing you must understand about the market cycle is what goes up has to come down and what comes down has to go up. Market cannot move in a straight line. It has a lot of these curves that you look in the chart of the market. So when you open any chart, you see the market is not moving in a straight line. It is moving either above the line or below the line. But when the market cycle changes from up to down or from down to up, the emotions or the feelings of a new trader changes according to the market movement of the market. So when the moment you start, from the moment you start, you are very optimistic, you are very positive. Now you have started your first trade in cryptocurrency, you are very hopeful, you are very positive, and you are very excited that if the market will go up, I will become very wealthy. Each person who enters in crypto market, his first mindset, his first hope, his first expectation is that he will soon become very wealthy. He will soon, very soon, he will become very wealthy. He starts to plan his future according to the investment that he has made. So when the market moves in our favor, when the market moves up, his feeling, his emotion changes to expectation. Sorry, excitement. His changes to excitement. Now he is getting excited that what he was expecting is happening in front of his eyes, and he is into good profit. So when the market moves even further up, even more up, he is into state of thrill. He is into a state of thrill. This is the time that he loses his patience, he loses his ability to judge the things, and now he's so excited, he's so thrilled that he puts all his wealth into the trading. Even he tries to borrow money from others. He tried to sell his belongings in order to increase his investment because he's so thrilled. He calls up his phone, he calls he calls his friends, he calls his friend and tell them, now I'm planning to buy a big car. I'm going to buy a big car from myself. He's as the market price increases, his brand of car or the cost of car is also increasing. He started from a, a cheap car. Now he's thinking about a good SUV or a Mercedes Benz. So he's so excited. He's so thrilled that he's into complete belief that he's going to become a millionaire soon, and all his dreams are going to come true. And then when the market reaches at the top, he's in the state of euphoria. We call it a little close to madness. This stage is little close to madness, and that is why they call it euphoria. Euphoria means that you are into a state of complete blindness. Now whatever you think is about investing into this market, you call up all your friends, all your relatives, all your neighbors, each and every person you know, and you want everyone that they should also start with you, they should also invest, or even you sell your house, you sell your old car and invest in the market, because now you are considering this market as a lottery, that you have just about to win, you are just going to win. So but a newbie trader doesn't knows this thing, that what goes up has to reach up a, a point of a price in the market when we reach a resistance point, a resistance line, that the market price, no matter how bullish the market is, cannot go further up into the market, further up. So when the price of the market reaches to this level, the line of resistance, the old traders, the experienced traders know that this is the highest profit that you can make from this market, and now the price has to go down, because what goes up has to come down, and there is a certain limit of the highest price that a market can reach. After that, the price refuses to go up. And why it happens? Because if you understand a little thing about trading, when a person started from here, or a person started from here, or a person started from here, this if these traders are experienced traders, if they have a lot of knowledge, they understand this thing. According to when they read the charts and the history of the market, they know now the market price has reached the resistance level. Now it cannot go further, and all these people start to sell. They start to sell here, and a lot of people are now, which were previously buying, now they become sellers. The buyers convert into sellers, and when we have lot of sellers that are dominating the market, and the buying activity has been lessened, and the selling is started, so the price has to go down, because the sellers are now taking control of the market. So when people start selling in profit, these newbie traders who have just entered, they are in a state of disbelief. They now into a state of denial or disbelief. They don't understand what is happening. For a person who has been waiting for the profit, now he's in a state of denial, and when the prices go down even further down, he is into the state of fear. His emotion has changed to fear. Now he's very fearful. He's fearing that his dream has shattered. Maybe maybe he lose all his money. Still, he's waiting for the market to go up. Still he's expecting that this is a temporary downfall in the market. Now again the prices will go up and soon I will take a lot of profit. But as the market enters into the red zone means that when he started with floating profit, now he is into floating loss. So now his capital is showing his capital is showing in minus, and now he's in floating loss. So then his feeling changes to panic. Now he's into the state of panic, and he now watches the market closely. Every hour, every minute, the price going down, and he thinks in this in he thinks in a different manner now. He believes that whatever the market is giving him, maybe he's into 30% loss, 30% floating loss. And if he waits for another one day, next day he watches the market and he sees that now he's into 40% floating loss. So every day his market is going down, his floating loss is increasing. So he starts to believe in this state that how much time should I wait? And the more time I wait for the market to recover, the less amount I will get if I don't sell my asset right now. So he decides to sell whatever he is getting, because he now believes that if he keeps on waiting further, his whatever he is getting right now, he may not be getting the same amount even after 1 hour or 1 day. So now he decides to sell in loss. And most of the sellers who sell at this time, they do panic selling. They sell their assets in loss because they don't have experience. No matter how much knowledge you have, how much classes you attend of trading every day, what matters most is your practical experience, is your first-hand experience in the market. Because what you learn out of experience is far more important than what you learn from different trainings. So he lacks the experience. Now he thinks that I am into 40% floating loss or maybe 50% floating loss. If I don't sell now, maybe I won't get even 50% of my capital. Maybe after a few days, it is reduced to minus 80% or minus 90%. So he decides to sell at this point, and he is into floating loss. And a lot of people started selling in this zone. And when the selling increases, when a lot of people are selling, the selling increases and the market goes down, even further down, till it reaches the line of support. So now what comes into the market is the experience of the old traders, the experienced traders. They now see this, what new traders are seeing as a loss. They now see the same situation of the market as an opportunity. They think of this as an opportunity because they know market moves in cycle, and this is the correct time that they should start buying. This is the correct time, perfect time they should start buying in the market. The buying should be now take into action. So lot of traders, the experienced and knowledgeable traders, they start to buy now. And when buying activity starts, a lot of people are now investing into the market. The buying is now taking control. The buyers are taking control. The sellers are diminishing. So now the price has to go up. Because when the buying activity increases, the price has to go up. And when a lot of people are selling in profit, the price has to go down. So this is the cycle of market. It will go on. It will go on till infinity. Even if you believe it or no, even if you understand it or no, you will see this happening every day and every month in the market. The market, when a lot of people take profit, at the resistance line, they sell their asset in profit. And when the selling increases, the price goes down till it reaches the line of support. Then the buying activity starts, and now the price has to go up. So this is how the market cycles goes ups and down. But for an experienced trader, this is an opportunity. So when he sees the market price has reached near the support level, when what we call in technically terms, we call it oversold area. We call it oversold area when most of the sellers have sold their assets, and now the buyers will start to enter the market. And this we call the overbought area, that nobody is now wants to buy more of this coin. Nobody wants to buy more of this coin because it is already reached the resistance level. So this is how the market cycle works. And if you have this knowledge, if you have this understanding, you will never panic. You will never take a bad decision in the market, and you will always recover your floating losses, and you will always trade long term, because you believe now what goes down, what is going down now has to come up very soon, because it cannot go below the support line, or it cannot go further the resistance line. But you see, there are three kinds of trends in the market. First is an uptrend, and second is a downtrend. When you see this resistance line is increasing its height, it is going up, means the market is forming new higher highs. From this higher high, the next higher high is higher than the previous higher high. Then again the market forms another higher high. Then again the market forms another higher high. This means that this is an uptrend. And in the same way, when you see this is a lower low and another support line forms below this lower low, then it is another lower low. So now you see the market is in downtrend. So you have to understand the uptrend changes to how the uptrend changes to downtrend, and how downtrend has to change to uptrend. This is the cycle movement of the market. And the only thing, the only most important thing that decides your future in the trading, that decides your profit or loss in the trading, the most important thing, apart from all these things that I explained to you earlier, the most important thing that decides whether you will get profit or whether you will see loss in the market is called your timing in the market. What is your timing to enter and timing to exit the market? Even if you have complete knowledge about technical analysis, if you have complete knowledge about risk management, capital management, even if you understand this psychology part, still if your timing is not good, if you enter the market when the market is near the resistance line, you will definitely fail in the trade. You will have to wait a long time when the market again comes up and reaches the same level and goes above. So if a trader buys here, and very soon he is going to see a floating loss, and when a trader sells here, he is doing a big mistake. Most of the new traders, when I talk to old friends, when I talk to old traders in the market who have just to gain some profit, they have entered in the market without any knowledge, without any understanding. They buy when the market was moving up, because all other people were buying. So they just followed the trend, and they buy when the market is at the height price, and they very soon they see that all their capital has reduced to minus 50% or minus 70%. Now they sell when the market is in floating loss. So that is the big mistake that most new traders do. Instead of doing this, you should always decide first what should be your time to enter and what should be your time to exit the market. The perfect time to enter the market is when market is in oversold area, is at the bottom. And the perfect time to exit the market is when the market is in overbought area or it's at the resistance level. If you reverse it, you will always face loss in the market. So always decide your timing of entering. Most of the people who start Royalq, they don't see the chart. They don't have knowledge and they don't look into the chart. How the what level is the market price right now? They enter immediately as their account is activated, and first thing they do is just start the trade at the current price. They don't understand whether the market is an oversold area or an overbought area, which is the correct time to enter. So that is why most people do this mistake, and they don't understand the market cycle and they don't have knowledge about this market psychology. So I hope you have now a clear understanding about the market cycle and psychology. And this is the most important chapter that you must learn. And to connect this same lesson, if you want to trade in any coin, the best number one coin of all other cryptocurrencies. See, today we have more than 23,000, almost 23,500 plus coins in the market. But it started with one coin, that was Bitcoin. The first coin that was launched in the year 2009 was Bitcoin. And all the remaining 23,500 coins are called altcoins. What is not Bitcoin is called an altcoin. So Bitcoin was the first coin and still it is number one. Still it is number one. No other coin has gone above this Bitcoin from the last 14 years. So the best coin to study and analyze the market is Bitcoin, because Bitcoin has a lot of dominance in the market and it has been performing the best. So let us see how Bitcoin has been performing for a few years and what is the correct understanding that you must have, and how do you understand the yearly trend of Bitcoin. So this is how Bitcoin has been performing since the year 2011. If we see 3 years, it has been in uptrend, then 1 year of downtrend. Then again, after 1 year of downtrend, we saw 3 years of uptrend again. 3 years the market goes up, 1 year market goes down. 3 year market goes up, 1 year market goes down. 3 year market goes up, 1 year market goes down. So this is a clear trend that you can see in this history of Bitcoin. This is a clear trend. So if I send you this information to any newcomer, even if you don't know anything about cryptocurrency, even a child who can read this chart, he can clearly predict that what is going to happen in the year 2023 and 24 and 25. These 3 years, any child can say that it is going to be an uptrend. Because last year, 2022 was a down. So this is very important to learn, that the coming 3 years are uptrend. If you have survived the last bear market, the whole 1 year of bear market, if you have still survived, and if you are still in crypto market, if you are still in Royalq, you are going to get the fruit of your patience. You are going to enjoy what you have been waiting for. Now the coming 3 years are very, very wonderful to create your wealth and to realize all your promise. So let us go to Bitcoin stock to flow chart. This is how Bitcoin has been performing from the day it started till today. So let me make it full screen for all of you. I hope you can see it full screen now. So this is how Bitcoin has been performing since the day it started till today. It started in this date, 3rd January 2009. This was the day of the launch when first Bitcoin was launched in the market. And where we are here now. We are here now in 2023. Okay. So you understand, if you look at this chart, this is showing a clear uptrend. Every day you see market is going up and coming down. Every month you see market is bullish or bearish. But if you take a bigger picture, if you look at the 14 years chart of this Bitcoin, you will clearly see that this is an uptrend. This is an uptrend. Why it is an uptrend? Because in every 4 years, Bitcoin has created a new all-time high. This is the highest price of Bitcoin in the first era. In the first era, what was the first era? That was called a pioneers era. And why do we divide these eras in 4 years? In 4 years, that is connected to this line that you see, the dotted blue line you see after every 4 years. After every 4 years, there is a very, very important event in the crypto market that is called Bitcoin halving. This is very important event, even most important event in the crypto industry. What is Bitcoin halving? Bitcoin halving is a big thing to study, but in a simple words, I can explain that Bitcoin supply is limited because of this Bitcoin halving. The total supply of Bitcoin is limited to 21 million Bitcoin only. It cannot go above 21 million. And till today, more than 19 million has already been mined. It has already been mined, 19 million. So what are remaining is even less than 3 million Bitcoins are remaining. Less than 3 million. Or maybe 2 million. Yes. 2 million, less than 2 million Bitcoins are remaining. Almost 93% of the total supply of Bitcoin has already been generated. So if you understand what decides the price of any coin or any commodity in the market, what decides the price? That is, if the demand is more than supply, if the demand for any product is more than supply, the price will go up. It will go plus. And if the supply is more than the demand, the price will go down. This you understand. This is very simple. Every trader, every businessman knows this. Even if you go to market and you go to buy potatoes or tomatoes, if the market has lot of supply, the supply is more than demand, the price of vegetable is going down. If the demand is more, the buyers are more, and the supply is limited, supply is less today in the market, the price will be higher. So this is how you decide the price of any coin. And if you see that demand of Bitcoin is going above, is increasing more and more. From the last 14 years, even more and more people are investing into Bitcoin. Every day, new investors are entering into the market, and the first coin they want to purchase, the first coin that they want to trade is Bitcoin. Every new investor, because they believe Bitcoin is the most powerful coin in this world. It is the mother of all coin, the number one coin. So every day new buyers are increasing, but the supply is limited. The supply is limited to 21 million. So when lot of new people enter into the market every year, the price has to go up. That is why you see there has been a clear uptrend in the market. And how this halving affects the price of Bitcoin is because in every halving, the reward to mine new coin, the mining reward is cut to half. The mining reward is cut to half after every halving. This is done just to maintain the total supply of Bitcoin. So when after many years, the all the new Bitcoin has been mined, so the mining will stop. Means there will be no more supply in the Bitcoin market. So everybody will now run to the market and they want to have at least one full Bitcoin. But nobody will then be able to buy one Bitcoin because there are only 21 million. So if you see 50 million people want to buy Bitcoin, they cannot buy even one single Bitcoin. So that will increase this price exponentially. And this has been happening since the first halving. Since the first halving, this has been happening. So when Bitcoin was launched for the first 3 years, from the year 1 to the year 3, the price of Bitcoin was just below $1. Even below $1. It was just $0.4, less than $0.50 for the first 3 years. But soon, very soon, a lot of people started to take interest. They started to mine. And in this era was a very important event that happened. It is very, very interesting event also that we just saw on 22nd of this month. On 22nd of this month, this 22nd May, we just celebrated a few days before the Bitcoin Pizza Day. The Bitcoin Pizza Day. We just celebrated 1 or 2 days before. Today is, I think, 24. And we celebrated this on 22nd of May. Why we celebrate Bitcoin Pizza Day is a very interesting story. Before that, nobody knew that Bitcoin can be used for trading. Nobody knew or even thought of that you can buy any physical product by paying in Bitcoin. So one fine day, there was a father who has 2 kids and his daughter was hungry and she wanted his father to buy him a pizza. So he went, he doesn't have money, but he has around 10,000 Bitcoin. He has 10,000 Bitcoin in his wallet that he has just purchased out of just trying what is this new thing. He doesn't knew that this is going to be a big mistake, but he did this mistake, and because of this mistake, a new era started of the people now came to know that Bitcoin can be traded also. Before that, only thing that you could do was to mine Bitcoin and to earn Bitcoin. Nobody was trading Bitcoin. But this was the first trade in the history that a person who had 10,000 Bitcoin, his children were hungry. They wanted him to buy a pizza for them. He went to a site bitcoin.com and anonymously he posted a comment that if anybody is interested to send me two large pizza for my children, I will pay him $10,000. 10,000 Bitcoin instead of dollars. I will pay him in Bitcoin. So nobody believed, nobody took interest after reading this comment, but there was one person who was the owner of that Papa's own pizza shop. He was owner of a shop who made pizza. So he replied to him that I am going to send you 2 large pizza. Make sure you pay your 10,000 Bitcoin to the delivery boy. Make sure you transfer the Bitcoins. So he sent him 2 large pizza for his children and he paid as promised the $10,000 Bitcoin. That was the first trade in the history that was made on 22nd May. And till today, every year we celebrate this as a Bitcoin Pizza Day. Every year. So day before yesterday was Bitcoin Pizza Day. A lot of people know. So this started a new trend that Bitcoin can be used to pay and buy food, buy clothes, buy anything you want, any physical product. This can be used as a currency, not only for gaming or mining. This is not a token. This is a pure currency that you can use as an alternate your fiat currency. So this started a lot of trading in the market, and the prices started to go up, and it reached a first all-time high. All-time high that was just around $10. Can you imagine? First 3 years, Bitcoin price was $0.4. Now it has gone up 10 to $10 per Bitcoin. So this was the first all-time high. And then after, as you just studied in the previous slides, that what goes up has to come down. When the price goes up to the maximum all-time high, it has to come down. Now the prices started to go down until it reached the lowest point. This was the lowest point in this era. And then the market was sideways. Then the market was sideways for a few months till we saw the first halving. We saw the first halving that was in the year 2012. In the year 2012, the first halving happened. Now people came to know that this is very interesting, that Bitcoin has a limited supply. It is cutting half its total mining reward. That is why it is limited in supply. So this caused a very interest in the market, and a lot of buyers now started to invest. And when buyers come in, what happens? You all know, the price has to go up. So Bitcoin touched a new all-time high. This time it was around $1,000 per Bitcoin. From $10 to $1,000 per Bitcoin. $1,000 per Bitcoin. That was incredible. For an investor who invested when the Bitcoin price was less than $1 or even $1 or even $10, now they were getting $1,000 per Bitcoin. And when they were getting 1,000, what people will do? What people will do? They will try to sell it because they want to have this profit in their pockets. So a lot of sellers now came into action, and when selling starts, the price has to go down because supply increases, demand decreases. So price went down and it reached the lowest level of this era. This was the lowest and this was the highest. I hope you are understanding this. Now what happened next? Again, the Bitcoin second halving happened. This was in the year 2016. So after this halving, again the prices started to go up because now a lot of people wanted to buy at this minimum level. At this minimum level, a lot of people were started investing into Bitcoin. Buyers become active, and now the price has to go up, and it reached a new all-time high, and this was even more than $10,000. More than $10,000 per Bitcoin. So this was the new all-time high, which was created in the third era. In the third era, that was called retail trader. The third era was called retail traders era. Why it was called? Because a very another important event, another important change in the market that happened in this era. Now, a lot of small shop owners, when you go outside in the market, you see a lot of shops, retail shops. So now most of the shops in the market, when you go out, they had a sign, a poster outside their shop, a signboard that read, what it read? That we accept BTC, we accept Bitcoin. If you want to buy anything from our shop, you can pay in Bitcoin also. We accept Bitcoin as payment. So this increased the awareness in the market. Even those people who didn't knew about Bitcoin previously, when they go out to shop in the market, they see this sign everywhere. And when they see this sign everywhere, what happens? People start to believe. People start to believe now that this is an acceptable currency. Lot of people, lot of shopkeepers are accepting this currency. So this created interest, and a lot of people now started buying, and the price was, which was at the all-time high of $10,000. For a little time, it showed a bull run, a bear market. Then it was into a pre-bull run. A pre-bull run means people were now buying and preparing for the next event, which is going to happen in the year 2020. Even before the third halving, lot of people were buying into the market, and this was called pre-bull run. As we are into this same stage right now, I will explain to you later. So this was the last halving that happened in the year 2020, and you can see that every year we see a new all-time high, and every all-time high is higher than the previous all-time high. Means this is creating new higher highs, a higher high. It is not going down. And if you see from a different angle, from a trader's angle, what is the price, the lowest price of second era? This was the low. In the second era, this was the high, but this was the lowest price. Right? And see, if you look closely, this lowest point of the market in the second era is still higher than the previous era all-time high. It's still higher. This price is still higher than the previous era all-time high. What happened in the next era? This was the lowest price. This was the highest, but this was the lowest price. Still, this lowest price of this market, of the third era, is higher than the highest price of the previous era. The highest price of the previous era. This is repeating in every era after and before the halving. This is repeating every era. So if this continues, what was the previous all-time high? Previous all-time high, which we saw in the year 2021. In the year 2021, we saw, this was the year 2021. This was the year 2021, and we saw a new all-time high, which was $69,000 per Bitcoin. $69,000, and it was uncomparable beyond all these previous all-time high. But what was the lowest price of this era? The lowest price was $15,000 per Bitcoin. $15,000, more than $15,000 per. This was the lowest price of this era. And as again it happened, like it happened many times before, it was still higher than the highest price of the previous era, which was around $12,000 per Bitcoin. The previous era all-time high was lower than this era's all-time low. So this means that the market will create a new all-time high in every era, and every time the market drops, it cannot go below the previous era's all-time high. It cannot go below what the previous era's all-time high was. So if this continue, if you understand this now, these two facts now, you can clearly predict what is going to happen after the next halving. And when is the next halving? In the year 2024. This is the most important halving that you will see in your life. If you remain in cryptocurrency till 1 year or 1 or 2 years, you can take advantage of this knowledge, and you can see the future right now in front of your eyes. What is going to happen? I'm not a crypto expert. I'm not a big expert in crypto, but I can tell you two things. Two important things that is going to happen. The first important thing, the new all-time high. The next all-time high will be higher than 69,000. The next all-time high will be higher than 69,000, because it has been happening every era. The next all-time high will be much, much higher than $69,000. I hope you agree. Do you agree? The next all-time high can be anywhere around here. It can be 70,000. It can be 100,000. It can be 10,000 or $1 million. Anyway, it can not be less than 69,000. The next all-time high. But what is even more interesting? How much higher is the next all-time high? No matter how high is the next all-time high, the lowest price of the next era. The lowest price of the next era. Listen carefully. The lowest price of the next era. Because we see a bull market, then a bear market also we have to see. So when the next bear market comes to our trading, next time we see a bear market, we see a bottom of the market. The next all-time low cannot be more than 69,000. Below cannot be less than 69,000. So these two facts are very, very important. The new all-time high, the next all-time high will be more than 69,000, and the next lowest point, the lowest low, will not be less than 69,000. Means no matter how bad the market is, in the next era, the price, the lowest price that you will get to buy Bitcoin will be more than 69,000. It will not go below. So imagine if the lowest price is 69, how high can be the highest price? How high? Some big experts in the industry, they say it can be more than $1 million per Bitcoin. All-time high can be here. You see this? You see this? This is $1 million line. And many experts now believe that from the year 2024 till 2025, Bitcoin touch a new all-time high that can be close to $1 million. And out of these, some people are so bullish, they are saying it can be more than $2.5 million. $2.5 million. Some even believe that Bitcoin can go above $7 million. I don't know whom to believe. But if I start today when Bitcoin is around $26,000, I know very clearly that it has to go above $69,000, maybe $70,000, maybe $18,000, maybe $100,000, or maybe even more. But it has to go above the previous all-time high. So whatever I invest now is very cheap. I'm buying it at a very, very low price, at the bottom price. So if you miss this opportunity in the first era when the highest price was just $10, you missed it in first time. You missed it second time when the highest price was just $1,000. You missed this third time also when the price was just $12,000 or $13,000. You missed this 3 times before. But now don't miss it this time when the price is just 26,000, when it has already gone to 69 and came down to give you this opportunity. The God has sent you this opportunity, that what has touched 69,000, it has now came down to 26,000. Actually, it came down to around 15,000, but now it has started a pre-bull run that I will explain in the next slide. What is a pre-bull run? So you have a clear understanding now that what you see in front of your eyes is a golden opportunity. God gives every person one opportunity in his lifetime that can change his future, that can change his fortune, and that can change his next generation's future too. God gives us everyone this golden opportunity, but unfortunately, not all of us see this opportunity. Most of us close our eyes. Most of us close our brains, close our ears, and they don't see, they don't want to hear, they don't want to think about it even. They don't understand this. But I suppose, I believe that you are not one of them. You see this opportunity right now, and you are the one that understand this opportunity, and you can take the maximum advantage of this opportunity. So you have this opportunity right now that you can invest your any amount of capital, whatever you can afford. You can start investing into Bitcoin, and the only thing, the most important thing you should do for the next halving, which is coming in the next year, is to prepare for the next halving. And what should be your preparation? That should be to accumulate as much Bitcoin as you can. I'm not saying buy 1 Bitcoin or buy 100 Bitcoins. I'm saying just invest into Bitcoin, whatever amount you have, because Bitcoin has an opportunity. Bitcoin gives us this opportunity that we can buy even 1 bit of Bitcoin. Bitcoin is divided into 1 million pieces. It can be divided into 1 million pieces. You can buy Bitcoin with $10 also. You can buy Bitcoin with $10 also. You can buy Bitcoin with $100 also. Or you can buy Bitcoin whatever capital that you have. It is up to you. Minimum you can buy with $10 in your exchange even, or with help of Royalq. The more you buy now, the richer you are going to become in the coming 1 or 2 years. The more you accumulate more and more of Bitcoin, the wealthier you will become. So this is the power of this Bitcoin halving that you must understand. And if I tell you about the 3 important phases of this era, each era has 3 important phases. This is a cycle of each era, the cycle of market. If you look closely, I will try to explain again. If you look closely, this was the first halving. And this was after this halving happened. After the first halving happened, what happened? We saw out of these 4 years, these are 4 years, okay? These are 4 years in total. Out of this 4 years, 29% of the days, I can zoom it for you if you look closely, right? You can understand it now. So this was the first halving. This line indicates the first halving, and what happened after the first halving for the next 4 years. This is 4 years time, okay? So in these 4 years, we saw 378 days that was into green. First, let me explain to you what these colors means. Green means post halving bull run. That is a high time when you can make big profits. The bull run starts here, okay? The post halving bull run starts here. When you see a pink color in the chart, that is bear market. When the market is going down, this is market is going uptrend, this is going market downtrend. But you see this yellow part on the market. Yellow means pre-halving bull run. That bull run is about to start. You can fasten your seat belts. You can prepare for the bull run to start, because now it is going to be a very, very high ride. So this is pre-bull run. When after this happens in every cycle, after a bear market, we see a yellow pre-bull run. And when this yellow part of the cycle of the time finishes, we enter into a bull run. This is number one. This is number one, then number two, number three. Okay, now you understand. Now let us see here what happened after the first halving. After the first halving, out of these 4 years, we saw 378 days of green. That is bull run. 29% was a bull run out of these 4 years. 51% times, that is almost 379 days were into bear market, means down market. And after that, 20%, the remaining days before the halving, before the second halving, were 265 days of pre-bull run. The market is preparing to start. It is showing signs of bull run. Okay. Then this halving, the second halving happened. The second halving happened. Again, market started and enter into green. That is bull run. But now the things have improved. If you compare these two, the things have improved. I don't see my pencil. Where is my pencil? Okay, it is writing. So after this second halving, this was the second, this was the first. In the second halving, these 4 years, how the things improved? The bull run, which was previously just 378 days, now we saw 528 days of bull run. Means from 29%, it has increased to 38%. The time of making money has increased from 29% to 38%. And the time of losing money, or the bull or the bear market, the down market, has reduced from 51% to 33%. The down market has reduced from 51% to 33%. Only 475 of down market. Then we enter into yellow zone, which is pre-bull run, and now from 20% it has increased to 29%. Means if you add up these two, green plus yellow, these are the times we are making money, and only 33% is the time that we are waiting for the bull run, that the prices is going down. So from 51% time of down market, it has now gone to 33% only. I hope you see a very good positive sign here. Let me find my pencil where it is. Leader Julius, can you unshare the screen if you are here? I cannot find how to share or unshare. My pencil has gone. I don't see here. Yes, thank you. So, till now, do you understand what is being explained? How much do you understand now? Let us now make the things fast, and let us go to the next part of the session before I finish this part. So let us now quickly see that what is going to happen in the future and what happened in the next 4 years after the second halving. This was the first halving, this was the second halving, and now we saw the third halving. This was the third halving. No, this was the second. This was the first halving. This was the first halving. This was the second, and this was the third halving. Okay. Now things have improved even further. Even further, the things have improved. You see here, from the 38% of bull run, we have now increased to 39% of bull run. From 33% of bear market, down market, now it has reduced to 32%. And the pre-bull run remains the same. Means more money, more bull run. So this is very positive sign that the days of making money are increasing and days of losing money are decreasing. So this is very important. So now if you have this understanding that what is most important to prepare for the next halving, which is going to happen very soon in 2024, just less than 1 year is being left, less than 1 year. What you can do right now is to accumulate more and more, because already we are into this pre-bull run. You can see here, we are into pre-bull run right now. We are into yellow zone, the pre-bull run. The bull run is just about to start, and those people who now prepare for the next bull run, they will be the most lucky persons. So how to prepare? Royalq helps you to accumulate more and more. Royalq helps you to accumulate more and more of crypto using its wonderful trade settings. Let us go now to Royalq. Let us go now and understand how Royalq can help you to accumulate more and more of Bitcoin using different trade settings according to your capital. See, everything depends on your capital. How much capital are you have and how much are you willing to invest into Bitcoin? So for this purpose, Royalq gives you 3 different options. It gives you 3 different markets. One is the USDT market, second is the BTC market, and the third is Ethereum market. The purpose remains the same. Purpose remains the same in every market. It is to accumulate the base currency. What is the base currency? Base currency means the coin which you are trading with. If you are trading in USDT market, the base currency is USDT. If you go to BTC market, now the base currency is BTC. You are trading BTC to trade on the second coin, another coin. If you go to Ethereum market, the base currency now has changed to Ethereum. Okay, now you understand what is the purpose. The purpose is to accumulate. If you want to accumulate USDT, you can go in USDT market, follow our signals, or do yourself technical analysis, and now you can trade on any coin with USDT. When the robot will sell the coin you are trading with, it will give you back your USDT. But if you want to accumulate BTC, now you have to go to the BTC market. The BTC market. You are trading BNB with BTC. You are trading BNB and you have a base currency of BTC. So what you are doing, what robot will do, every time the price of BNB goes down, it will go and buy BNB. And what will it buy with? It will buy with BTC. It will not give USDT. It will give BTC to buy more of BNB because the price is going down. Again, the price goes down. It will buy more and more of BNB. It will keep on buying till the market cycle changes from downtrend to uptrend. Now the price of BNB is going up. It will wait for the profit and sell all your BNB and give you back what? Your BTC. Because you are trading it BTC. So it will sell all the BNB in profit. It will not sell in loss because it is only designed to sell in profit. It will give you back your BTC plus capital plus profit. The capital you invested plus your profit. And the most interesting thing is the profit that you make will be in form of BTC only. It will not give you profit in USDT. It will give you profit in BTC. So this way you are increasing and accumulating your BTC if you are trading in BTC market. Suppose you started with $1,000 of BTC, $1,000 worth of BTC, and you have made 5% profit on this trade. So that means you have now 1,550 BTC now, $1,050 of BTC. So you have increased your BTC capital by $50 of Bitcoin. 5% you are increasing. If you are increasing 5% every month, after 1 year, you will have 60% increase in your 60% increase in your capital. If you are increasing 10% every month, after 1 year, you will have 120% increase in BTC quantity. That is the most important thing. So this is how you accumulate BTC using this BTC market. And if I go to any trading pair, you can select any of these. No matter it is performing good or performing bad, it doesn't matter, because it is not a signal trade. It is not a short-term trade. It is not on one shot. It is on cycle, and you will keep on buying and selling for one full year. The robot will buy and sell for one full year in a cycle mode. So you can trade on any coin that you want. Or let us take example, this coin, which is the lowest one right now. So this gives you an opportunity to buy at the lowest price. Because as leader Julius says, always enter when the market is at the bottom. So this is a poorly performing, at the price is at the bottom. Now you see the green candle is started, and even the Bollinger Bands, if you have this knowledge, the Bollinger Bands are pointing wide. This means that this is going to go up. So if you enter right now, you can make a good profit, but this is not a financial advice. Let us go to the setting parts and go to martingale strategy and create the trade settings for our trade. Okay. So if you want to create a trade setting, you go to this trading page, the trade settings, and now here you define how your Royalq robot will trade for you. It will follow your instructions. So if you have clear knowledge about, if you have good knowledge about how to set your trade settings, you can give your instructions. Or another thing you can do, you can just use the default settings of the robot. This is the default settings that Royalq gives you, that if you are a newcomer, you don't know how to set your trade, you can use this as your default setting, and this is the best setting. Even if you consult any expert, he will read this settings and tell you that this is the best settings. This is the best possible settings. So Royalq advises you to use this setting, or you can change according to your capital. It says the first buy in amount is as little as 0.0002. This is the minimum. You cannot go below this, but you can increase it if you have good capital. So if you convert this into USDT, you will find that it is just around 3.5 USDT. Just 3.5 USDT. Not even 15 or 12 USDT. This is less than what you used to spend on USDT market. So this is the minimum first buy in amount. The advisable, the suggested margin call limit should be 7 calls per trade, per coin. Okay. This is suggested. You can go below this, you can increase it according to your capital, but this is good. The whole take profit, you can decide if you want to have 1.3 or 1.2 or 1.1 or 1.5 even, but don't make it more than 1.5, because you will then lose the chance of getting small profits every day. So 1.3 is very good. The callback is 0.3, so it will give you 1% on every trade. That is good. Maybe you make 1% one time a day, or maybe 10 times a day according to the market fluctuation. Buy in callback is good, or you can reduce it to 0.3, and supposition is also good. Cycle mode should be kept. This is good. The cycle mode should be kept. Now the main thing that you must understand is this part of margin configuration. For that, we have to go to this arrow. Let us go to this arrow and move to the next page, where you define your trading capital and your risk, the risk coverage you want to take in the market. So this is how Royalq will buy and sell for you. buy for you when the market falls down. So how you can design this strategy? These are the 7 margin, as you can see. These are the 7 margin calls. And this page consists of two sides, the left side and the right side. The left side shows how the market is behaving, and the right side shows how the robot is behaving. So in this way, you are telling if this happens, if the market falls down by 1%, go and buy this much times. This much is time. Time of what? Time of your first buy. What was the first buy? 0.0002. This was your first buy. So it will buy 2 times of this first buy, whatever you have cut. Again, the market falls down by 1%, go and buy 4 times for me. Again, the market falls down by 2%, go and buy 8 times for me. 8 times of first buy, 4 times of first buy. I hope you understand these things. So I will not go deep into it, but what depends, how do you define these two sides of the page is your capital. So here you manage your capital and here you manage your risk. You remember in the first slide, I gave you these two important topics. How do you manage your risk? The risk management and the capital management. This is where the things come into action. Here the capital is managed and here the risk is managed. So always think about managing a very large percentage of the risk of market going down. So I will always advise to at least cover 30% to 50% of the market. This is advisable. Don't cover less than 30%. 30% to 50%. So if you come to this page very first time, maybe you see different figures here. You will not see the same figures here. You will not see the same figures as you see here. I have edited it. But when you come to this page, you will see that here is 3.5%. Here is maybe 4%. Here is maybe 5.2%. Here is maybe 6%, maybe 7%. So these figures will be a little higher. And if you add up all these percentages of 7 calls, the Royalq advises you to put at least 47% to 52% market drop. Royalq advises you to cover at least 47 to 50% market drop in the market. So this is very good because you don't expect that market will fall more than 50% or maybe more than 40%. So if you have less capital, what you can do, if you have less capital, you can cover at least 30% to 40% of the market call drop. That depends on your capital and how many calls do you take. So if you take 7 margin calls, you can cover at least 30%. And what I have done in the first 4 margin calls, I have covered 6% of the market, 6% market call drop. And the remaining 25 or 24% I have covered in the remaining 3 calls. You see, 12 plus 12 is 24. 12 plus 12 is 24. In the 5th, 6th and 7th, it is 24%. And the first 4 margin call is 6%. So if you add up, you will get 30% market cover. You can use this or you can change according to your own strategy. But don't cover less than 30 or 35% or 40% of the market call drop because you never know when the market can go down or market can go up. You need to be prepared for every side of the cycle. Another thing that you must decide here is how you manage your capital. The capital management is covered in this side of the page, that how you manage your capital. If you have $1,000 or maybe you have $5,000. You don't want to invest all your money in the first call or the first 4 margin calls. You want to distribute all your capital, and you want to distribute and allocate your capital in these 7 margin calls. So how you allocate is how you decide your strategy. So the base rule, the base thumb rule of this every strategy is called martingale strategy. Why it is called martingale strategy? And it uses dollar cost averaging method. It uses these two. It uses these two important theories. And what is the meaning of martingale and dollar cost averaging? If you combine them, it gives you a clear understanding that when the market goes down, increase your purchase, increase your purchasing power. You should give more capital when the market goes down. Means you will buy more when market goes down. Okay, so it should be in increasing order. Every strategy should be in increasing order. It should not be in decreasing order. It should always be in increasing order. It should not be in decreasing order, or it should not be remain same order. These two are not advisable because these are poor strategies. The best strategy is to use in increasing order. And how much you increase is depending on your capital. So I will give you 3 strategies. Now I'll give you 3 strategies, and all 3 will be in increasing order. Increasing order. The first one is called double up. You are doubling up every time. If so, suppose you bought 2 times, then you buy 4 times. Like you see in the page, you buy 2 times, then you buy 4 times, then 8 times, then 16 times. Double of what you bought before. Double of 16 is 32. Double of 32 is 64. So you are using double up strategy. I hope this is understood. Second strategy is called Fibonacci strategy. How Fibonacci comes in action? First time you buy 2 times, next time you buy 3 times. Third time you buy 5 times, then you buy 8 times. How to get these figures? Add up last 2 margin calls, 2 plus 3, and write a 5 here. 2 plus 3 is 5. The total of last 2 margin calls, 2 plus 3 is 5. Then again, total of last 2 margin calls, 3 plus 5, what is it? 8. So what will come next? 5 plus 8, that will be 13. 18 plus 13, that will be 21. And so on. This is called Fibonacci. Both strategies are increasing in order, but double up is buying more. This is buying less than double up. And the third strategy is called the very simple plus 1. Plus 1. As the name says, if you bought 2 times, then plus 1 and buy 3 times, plus 1 by 4 times, plus 1 by 5 times, 6 times, 7 times, and so on. Just add up one more because you want to increase the purchasing power of the robot. You are buying more. So that is the simplest of all, but everything depends on your capital. And if you compare these 3 strategies, the double up, the Fibonacci, and the plus 1, out of these, this is the best one. This is the best. And this is you can call good. This is good and this is better. You got it now? So if you cannot afford best, go for the better one. If you cannot afford better one even, then go for good one, but don't go below this. Don't go into poor strategy. Don't go into decreasing order or the same order. That is poor. That will increase your floating loss. Always try to improve the quality of your trade, not the quantity of trade. Don't trade less coin, but trade better. Don't try to trade more coins in less quality, but you can limit your trades to 1 or 2 coins, but increase the quality and increase the capital in each coin. So if you want to know how much capital is required, what you can do in calculation, if I start with double up, I need to add up all these figures, 2 plus 4 plus 8 plus 16 plus 32, and the total will give me total times. The total time robot will buy of what? Of my first buy. So let us now go to calculator and do a quick calculation. So I will add up 7 margin calls starting from 2 and double up every call. Double up 2 plus 4 plus 8 plus 16 plus 32 plus 64. How much are these? 1, 2, 3, 4, 5, 6. One more plus 128. 128. So this comes to 254 times. You see, these 7 margin calls have the total times of 254 times it will purchase. But this is not final. Add 1 in the last. Why? Because before it started to buy first margin call, it has already bought 1 first buy. So actually it will buy 255 times. This is not capital. This is times it will buy of your what? Of your first buy. And what was the first buy? It was 0.0002 if you remember. So this is the actual time this is the actual quantity of Bitcoin that you require. This is not still in USDT. This is in BTC. The BTC you must have, the quantity of BTC you must have 0.051 BTC. And if you multiply it with the current price of BTC, maybe it is 26,000. Right now, let's take a round figure. So this tells you that how much capital in USDT that you require. This is the capital in USDT, 1,326 USDT. If you have around 1,300 USDT, and this is the current price, you will get this quantity of BTC. Go and buy at the current price, you will get at least you should have 0.051 BTC. So if you have this capital, you can start immediately and use the best strategy that is called double up using 7 margin calls. I hope you understood this. If you understood this, you can write chat. You can write what you can do. You can write yes in the comments in the chat option. Let me check if you have understood this. Let me check if you have understood this. If you understood like the first strategy of double up, just write yes. Just write yes. I am not reading your questions right now. You can ask your questions in the end when I will give you a time for answering your questions. If you have understood right till here, you can write yes. If you have any doubt, I can explain again. I hope you have understood all of them. All of you have understood. That is good. That is good. And let us now go to the second option. Why second option? Why? Because if we use double up, we must have at least 1,300 USDT. This much is our requirements. But not all of us have this amount of capital. Maybe someone says, I have less than $1,000. How can I use this BTC accumulation in BTC market? You can use, but you have to go from the number 1 strategy and compromise a little bit and use the Fibonacci, the next best strategy. It is not as good as double up, but still it is very good. This is good, but this is better. Okay. So Fibonacci says that you are now require less capital, so you can buy less, but always buy more. Means always buy in an increasing order. So if you buy first time, the first margin call was 2. Now instead of 4, you can put 3 here. Now add up 2 plus 3, then write 5 here. Add up these two and write 8 here. So you can see that we are reducing the buying, but still it in increasing order. So instead of 32, you will buy 13 times here. So this way you can add up all these in your calculator and calculate how much capital is required. So let us go back to and add up all these 7 margin calls. But one more thing you can do. Now you can increase one more margin calls, and let's add up 8 margin calls. Instead of 7, now we can have 8 margin calls. So the first one will be 2 times, then 3 times, then 5 times. We are adding two last 2 margin calls. So 5 plus 3 is 8. 8 plus 15, 8 plus 5 is 13. 13 plus 8, that is 21. And 21 plus 13, that is 34. These are the 7 margin calls, but we will add one more. Why? Because we can buy more now. So 34 plus 21, that comes to 55. So now we have 141 times. 141 times plus add 1 in the last, because this was 45. So actually we are buying 142 times. Previously we were buying 255 times. Now we are just buying 142 times of what? Of our first buy. That is 0.0002. So we will require a BTC quantity of 0.0284. And if you multiply it with the current price, suppose it is 26,000, we will require just around $700 of USDT. You see here, this is the capital required in USDT. If you have $700, if you have less than $1,000 but more than $700, you can use the second best strategy, that is Fibonacci. Open up 8 margin calls and start trading. If you have more than 1,300 USDT, you can use the double up strategy. But someone says that he has even less than $500. Can I trade? Yes, you may, but you have to compromise again. If you have less than $500, what you can do, you can use the third best one. The third best, which is called +1. +1 means if you bought 2 times, then you buy 1 and buy 3 times. Remember, you must buy in an increasing order. So +1 is 4, 4 plus 1 is 5, 5 plus 1 is 6, and so on. So let us go back to calculator, but now we can make at least 10 margin calls. Instead of 8, now we have increased to 10 margin calls. Let us calculate how much capital is required for 10 margin calls. It is according to your capital. Maybe you have even less than that. You can buy 7 margin calls or 8 margin calls or 10 margin calls, or maybe you can buy 12 margin calls according to your capital. Let us take an example of 10 margin calls and calculate 1 plus 1. 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 8 plus 9 and plus 10 and plus 11. So these are the 10 margin calls, as you can see, and the total comes to 65. Don't forget to add 1 in the last. That comes to 66 times of what? Of our first buy. That was 0.0002. So now the total BTC required in capital is 0.0132. 0.0132. And if you multiply it with the current price, if it is 26,000, you just require $343. So if you have around $350, you can use this strategy. If you have around $300 to $400, you can use +1 strategy. If you have around $700, you can use Fibonacci. And if you have around $1,300 or more, you can use the best one, which is called double up strategy. So these are the three different options that you can use. So even if you have less than $700, maybe $500, someone says I have $400, someone says I have even $300, someone says I have even $200, you can use the same capital and use 7 margin calls to 10 margin calls. 7 to 10 margin calls, that depends on your capital. Use +1. But if you have more than $700, you must use this one, Fibonacci with 8 margin calls. Even if you have less than 700, you can use it with 7 margin calls or 8 margin calls. 7 or 8. Okay. Don't try to buy more coins with the poor strategy. If someone says I have $1,500, I want to invest in 3 coins or maybe 5 coins, I can use this +1 strategy for 5 coins. Yes, you may, but the strategy will be poor. And the floating loss you will see will be more. You will see more of floating loss and less of profit. Do you want to see more floating loss and less profit? Or do you want to see more profit and less of floating loss? I hope you have the answer. If you want to see less floating loss and more profits, improve your strategy. Improve the quality of strategy. Don't compromise if you have big capital. If you have enough capital, don't compromise with your strategy. Only compromise if you have less capital. So when you come to this page and you have designed this strategy, just save it and start this strategy. Return to the main page. Now you have given the instructions. Now before you start, do one more thing. Come here and do a little change. What change is required? By default, the robot will show you this one, whole warehouse mode. Change it to sub-bin mode. This is advisable for this cycle mode of BTC accumulation, because we don't want to take our profit out of the trade. We don't want to take our profit out of our trade for at least 1 year. We want to accumulate and compound. Compound is the secret of accumulating wealth. When you know how to compound, you will be successful in creating wealth and accumulate more and more of BTC. So the secret of compounding is given here. That is sub-bin mode. How it works, because if you use this mode, the sub-bin mode, the middle one, the robot will add up the profit you make inside your capital and use it for trading. It will keep on adding the same profit inside your trade. It will keep on adding your profit back to your capital and use it to compound. So now you will trade with larger capital every time. Every other time the capital will increase. But if you use this one, as we use normally in USDT mode, this will deduct the profit and give you your profit in your account. So it will not be added up in the capital. It will take out your profit from the trade and it will not use the profit to invest in the same coin. So this is advisable. The best effective way is to use the sub-bin mode. If you don't want to withdraw your profit every month or every week, you don't want to use your profit in BTC to withdraw in your bank account, you want the same profit to be invested again in the same trade, and you are now compounding the BTC and accumulating more and more. So this is the best way. And it has one more advantage. It will improve your dollar cost averaging also. It will improve your dollar cost averaging, because you are adding up every time you make a profit. So just make these changes and just press start and you are good to go. I hope this is understood. And this was the last lesson for today. I hope I made it clear to each and every one of you. Still, if you have any questions, I can wait for another 2 or 3 minutes and we can solve or resolve your queries. Okay, Miss Dora is asking, the robot asked for 0.01 BTC first buy in amount anytime I attempt to set the trade. I think I just showed you, I just shared my screen with you. It is showing 0.0002, 3 times 0, then 2 BTC. And maybe there is some changes in your default setting or something, or maybe there is some bug. You can either consult your upline, or if you don't find a solution, go to the feedback session of Royalq. Go to the feedback section and ask them the same question, and they will be the best person to answer you. Okay, I don't see this kind of error in my robot. Maybe you are facing, so maybe something is missing there. Please explain the basis of first buy in amount 0.0002 BTC for the sake of newbies. The basis of having a little first buy in amount, I hope you have understood now, is to increase the power to purchase more when the market goes down. So if you want to buy 255 times of your first buy, you have to keep it as little as you can. Because if you are using double up strategies, the total number of times you are asking the robot to buy 255 times. So if you make it more than the recommended 0.002, it will require a larger capital. You can use if you have larger capital. If you want to trade with $2,000 or $5,000, you can increase it. But Royalq suggests you to not go below this. This is the minimum that you can have. I hope you understood. I have running trade using the +1 strategy. The trade is on the 10th call. Please, how can I change it to Fibonacci? You can change it anytime. The Royalq is so user friendly. It allows you to change your strategy anytime, even if the trade is running. You can go back to your trading, your margin configuration and change anything that you want. Even if it has gone by 10 margin calls, you can change from the 11th also, or even you want to change, you can change from the first margin call also. So it can be done anytime. Even if you have bought 10 margin calls, you can go and increase. If you have capital, you can increase and change your strategy from +1 to Fibonacci, or from Fibonacci to double up. Anytime you can change it. So it will act accordingly the moment you save the new margin configuration. The moment you save, so the next buy will be changed. From the 10th margin call to 11th margin call, the next buy will be changed. And if it sells the 10th margin call and come back to 9th margin call, it will now it will now trade the new settings as the next buy. So if it sells the 10th margin call, and now it will show that the changes you have made, it will buy the 10th margin call with the new settings. So you can do it anytime and as many times as you want. I hope this is answered. I think this is recorded and it is going live on YouTube. You can watch this again and again in the live section of our Crypto Ambassadors YouTube channel. I hope you have subscribed the Leader Julius own channel, that is Crypto Ambassadors in YouTube. And you can find this video in the live section. It will be uploaded. and you must share it with all your teammates who have not attended this on live. If you are trading in cycle mode, do you need to set a preset price? Yes, you can. It is optional, but uh, do it carefully, because you need to be very particular how much drop you want to give to the robot to buy in the preset price. I cannot tell each and everything here. I cannot explain, but you have to calculate yourself how much the market has gone down in your case, in your trade, and how much the market has gone up, and what should be the next preset price that you can make. Maybe you don't want to buy at the same market price, so you can put at least 2% or 3% down, or maybe 1% down. Is up to you and according to your calculation. How much approximation can I accumulate with $300 for 6 months? I cannot calculate it for you, sir. You have to do it yourself, and you cannot calculate exactly before you start the trade. You just have to start the trade, then after 6 months you can calculate. We cannot calculate how much it has accumulated, but it is definite, it is for sure that it will accumulate, because you are earning your profit every time. Suppose you are earning 1% profit on every sell, you are increasing your BTC by 1% every time the robot makes you a profit. So if you make 10% in 1 month, you have increased 10% of BTC. In 6 months, I don't know how much it will accumulate, because you have to do it practically. You cannot pre-calculate. How did you get the first buy in amount of 0.0002? I didn't get it. It is given in default by Royalq itself. Like Royalq gives you in USDT market, now it gives you 12 USDT as the first buy. If you go to the default settings, the Royalq gives you $12 or 12 USDT in USDT market. Same way it gives you 0.0002 as your first buy in amount. If you don't find it, you can write it down, 0.0002 in the first buy. That is the minimum. You cannot go below it. So I first change it to 11. Yes, if you have already bought 10 times, you can increase your margin calls, maybe 11 or 12 or 15 as much you have your capital. So thank you so much, all of you who appreciate me, appreciate our learnings, and they they give their time and their attention to learn this very wonderful concept of BTC accumulation. I will advise in the last that you can use it as a first option or maybe as a second option, but don't don't treat it as an only option. This is not one and only strategy that you can use. You should always focus on USDT market first, because there is where you find your income. There you find your daily income, and you make good profits every day if you are using our signals. So always focus on earning more by using USDT market. And if you have some spare capital, maybe you have $1,000 spare or $1,500, you can go and use this for BTC accumulation. That should be your second option, not your primary option. And if you want to earn daily profits, you must go to USDT market only, because that is very aggressive market. But if you experience in BTC market, as I am seeing from the past many months, it is very slow market, but we are trading for a longer term, so we can accumulate our capital there. In USDT market, maybe every day you are earning 2% to 5%, but in this BTC market, maybe you earn around 10% in 1 month or 5% in 1 month. but slowly and gradually you will accumulate your capital. If you run this trade for at least 1 year or 2 years, you will soon accumulate very large amount of BTC. And when the next halving comes, you will be the most lucky person that you have bought BTC and accumulated when it was very low in price. So you will accumulate wealth and become super wealthy in the next season. So thank you so much, all of you. I hope you found this session very interesting and valuable, and you can uh, get access to this video in the live section of Crypto Ambassador channel, and you must share it with all your teams, all your even prospects. You can share with all your friends to give them this knowledge, and if they understand, they will definitely join with you. So thank you so much, Leader Julius, for giving me this opportunity every time, and see you next time. Till then,